Hey, Al.
Where's everybody? Where are you in the world? Where are you in the world, and how did you find out about this meeting? Panama, Montreal, Panama, Carl, Rika checking in from Montreal, Adrian. Welcome, 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 welcome. We'll give people a little bit of time to come to pop in. Orlando, Nicole Pickett, are we related? Baltimore. Hey, cousin. What are you looking forward to most out to get out of this evening? One of my current clients. Awesome. Awesome. Welcome, welcome, Chastity. Hello, Renee. I'm excited to share. Very excited to share. Extra income. Okay. All right. Anybody else? What are you excited to get? What would you like most out of this training is the question. Income for retirement. Okay. Knowledge to do this with ease. Is anybody on this call already trading? I'm new to the stock market, so I'm eager to learn. Awesome, awesome, awesome. When you're in for a treat tonight, whoever sent you this link, thank them. And my goal is to make sure that you have a reason to do that by the end of this call. That you have a big reason to do that. We're not gonna wait long for people because that's the way opportunity is. It comes, and then you either are in sync with it or not. So we have to take advantage. Any of you already trading? Okay, paper trade. I know concepts of the subject. Awesome. Zoom user, what's your name, Zoom user? What's your actual name? I like to know who I'm talking to. Wanda, welcome. Right. All right, this wasn't something I promoted heavily. It was just something that I said, I know how many people are being impacted by how did this all come about? I know how many people are being impacted by the shutdown, and you see more layoffs and more layoffs and more layoffs. I was driving. I was like, you know what? Well, I had a conversation with a friend. Is how it all came about, and I said, you know what can I do? And this is how this came about. So it's like I'm not gonna, I'm not person that's gonna put it off and put it off and put it off. It's like, okay, well, I'm gonna do it Thursday, figuring out what day I'm gonna do it, and this is how this came about. So that being said, I'm going to share my screen. We're going to start. Let me give you a little bit of uh, kind of idea how this is going to go, and how you can engage. Is it, part of this is going to be a conversation. I want you to engage. I'm going to engage you. I'm going to have you answer questions. I want confirmation just from, make sure that you're tracking, making sure that you understand certain concepts before we move on. I'm big on clarity. I want you to have clarity so that you can execute this for a lifetime. Um, Drop some ones if things are making sense. If it's not making sense or you need a little bit more clarity, drop a two, or just kind of just ask the question, and I'll be happy to explain. Somehow, well, I know how I'm getting over a cold. I took my nephews out to celebrate his birthday, and we went to a place where there's a lot of kids, and so I imagine I picked up some germs, and so if I sound a little bit hoarse, that's all that is. But we're gonna make it through. All right. So I'm gonna share my screen. Drop some ones if you can see the black print. You can see that at the top. Okay. Wonderful, wonderful, wonderful. Well, welcome. My name is Al Pickett, and I've been trading 21 years. I should update this, but I've been trading 21 years, and I've been coaching 11, wrote two books about it. My social media is Mr. Al Pickett, so you can follow across the board, whether that's Twitter or Instagram, Facebook, LinkedIn, all the things. Um, what I teach people is practical concepts. Of first, I teach them how to read the markets front to back, so from left to right. What I'm saying there is what we do is read the actual price, like the most objective data. And the example that I like to give is when you're going past the gas station, you don't really have to think about economics. You don't really have to think about who's the president or the state of the world to know that gas prices are going up or going down. Your mind is already tracking that, like, oh, gas prices are higher than the last time I passed or lower than the last time I passed. And that's something that's very, very objective. And the bottom line is when you go into the gas station, you either paying the price or not. You either pay the price or you leave without gas, right? And so the markets are the same way. It can be extremely objective, and that's going to be my goal to get you to that place without having to think about what's happening with the economy, watching the news, the CNBCs, the Bloombergs, or any of that. I don't watch any of that. So I want to make sure that you have a practical process to participate in these markets for a lifetime. All right. Um, Now, these concepts that you're going to learn they are very, very simple. Uh, but there's an element of this where you need psychological wherewithal as well. You need emotional control as well. Every single one of us have, we have different relationships with money. From the first time that we touch a dollar, we have a different relationship with money and risk. And so some people are going to be more greedier than others. Some people are going to be more fearful than others. Some people are going to be more hopeful than others. And so to the point that you can manage those emotions really tells the tale of how well you can do with this. And I'm sure we'll talk a little bit about that as well. But the process is something that's repeatable, and I'm going to show you how to frame your emotions around this process as well. All right, everybody tracking so far? Does that make sense? Any questions about that? All right. So how did I even end up in this business? Well, I was in the mortgage business for 10 years, and I was doing really well. Started in the mortgage business very, very young, and I had a financial advisor very, very early. Grateful for that, and he was able to give me 82% in 1 year. And 82% is a large number. And what I said to myself is, if I can get anywhere close to 82% on my money, with the money that I had in cash in the bank, I said to myself that I wouldn't have to do another business in this world, and I could be anywhere in the world. I can do it from a laptop. I wouldn't have to have employees. I wouldn't be chasing down customers and any of that. And so from that point, I said to myself, "Hey, this is the business that I need to be in." And there's also no income cap. So that was another big piece of that. But the main driving forces for me were I want to be where I want to be, with who I want to be, when I want to be, doing what I want to do. So it's just, the overall freedom was the biggest thing. All right. So 82%, I got into the business. It wasn't much that he could teach me. I had to learn a lot of this, pretty much all of this on my own, right? I called him up and I said, you know what, I'm going to take it from here. And I just started learning. I had some initial success and great success out of the gate, and then it went bumpy. And then I had to find my way. I had an initial strategy where I would just follow the money. I would see what the officers of these companies, let's say Google. Well, when they buy shares, it's very public information. So I could go on yahoo.com and I could see when they were buying and I would just follow the money. Well, what happens when they stop buying? Well, my strategy is dead. So I had to figure out how this thing really, really worked. And so I just knew that if I kept in this direction, I would figure it out. And so piece by piece, I put it together. And that's exactly what I'm going to be sharing with you. All right. So here's what you're going to learn tonight. Here is what you're going to learn. You're going to learn how to read price charts through candlesticks. You're going to learn how to identify support and resistance. You're going to learn how to identify price ranges and trends. And two important concepts: when to buy. This is the biggest question that people have. When should I press the button? Participation. So two P's. When do you participate? And then how do you protect yourself? When to sell? How do you protect yourself? So those two P's, participation and protection. Now, usually when I'm doing these presentations, the majority of participants pretty much know stocks, right? But there's so many other things in the world that you can invest in and trade in and so forth. And so stocks these companies are all familiar, right? Tesla, Google, Meta, Nvidia, Amazon, Google, no, what's that? Microsoft and Apple. So these are all everything that's familiar. Every these are anybody invested in any of these at the moment? Yes. One way or another, maybe through 401ks, through other retirement accounts, Roth IRAs, etc. But this is all, this is what everybody in the world can invest in, or most people know through ETFs. All right. Awesome, awesome, awesome. But there's a whole nother world. There's a whole nother world. There's commodities. So your oil, your steel, your gold. We're going to talk about gold. We're definitely going to talk about gold. Gold, silver, platinum, palladium, corn, cocoa, you name it, lumber, all of the things that it takes to build a house, all the way down to your lean hogs, right? Anything that we eat, sugar, all of that, wheat. All of these things are investable assets, tradable assets, investable assets. You're gonna hear me use tradable. You're gonna hear me use trade a lot. The world at large thinks, more so has the terminology of investing, but to me, it's all trading because, maybe the time horizon is a little bit different. But you are putting on a position and anticipating profit from that position, or accepting the loss on that position, no matter how long you're in that position. You have that investment. All right. Now, how many of y'all, if this is new information that you could trade all this, drop some ones. If this is new information that you could trade oil, that's awesome. The reason I think that's awesome because once the mind expands, Once you know that these options are available, I mean, your world just got bigger just like that. The world of opportunity just became bigger just like that. So I think that's wonderful. And I'm going to show you this on some of the charts as well. Additionally, currencies, your dollar. There are multinational organizations, governments, individuals, corporations, banks, financial institutions, etc., that are exchanging these what we would call fiat currency all day long. I forget what year it was, but this market has almost doubled. It used to be about $5 trillion moving around the world every single day. Now it's $9 trillion, 9 trillion with a T, that's moving around the world every single day. Whether it's in Japanese yen, whether it's in pounds, or whether it's in euros. You have your African rand, you have New Zealand dollars, you have Australian dollars. Every currency in the world, there's some transactions that's happening in that, and that money is exchanging, digitally, physically and digitally. But it's $9 trillion a day, and so this is the largest market in the world. There is no larger market than the actual currency market, and what we would call foreign exchange. Forex. Some of you all may have heard of Forex. Has anybody heard of Forex? Forex, Forex. This is Forex. This is foreign exchange. So and some years ago, it's got a bad rap about it being like, oh, what is Forex? That sounds crazy. It sounds dangerous. It sounds like a scam. No, if you call doing transactions with your bank every day a scam, I mean that's Forex. That's foreign exchange, because that money is maneuvering its way through financial systems all across the world. But you can trade your dollars, you can trade Japanese yen, you can trade euros, you can trade British pound, Japanese yen, and so forth, um, or British pounds. And I'm going to show you that as well. Cryptocurrencies. Besides Bitcoin and Ethereum, what are some cryptocurrencies that you all have heard of? And if this is your first time hearing of cryptocurrency, drop a one. If this is your first time hearing of cryptocurrency, drop a one. Okay. And you know what I forgot to ask? Did you all know that you can trade your currencies? Did you know that you can actually trade your dollars, euros, British pounds, Japanese yens? No, first time. Okay. All right, Solano. That's good. That's good. That's good. Very good. Very good. So we're growing. We're expanding. All right. So cryptocurrencies, which is it's relatively new, right? But growing massively. The adoption is growing even bigger. You see these, multinational organizations that are now adopting this. All the investors, big investment banks are adopting it. You're seeing more government regulation come online um, to talk about what regulations are going to be put around cryptocurrency. So this is something that's going to continue to grow. And these are the big dogs. Your Bitcoin and your Ethereum, like they're the grandparents, if you will, right? And you're going to see more and more and more come online, but these are the big ones. All right. So the markets have a common language. And the only reason that everybody on this call can understand me clearly is because we all speak English. And that's just what it is. But the markets also have a common language. And so um, our job is to get our skill level up enough to what my goal is going to be with this is to make sure that you also have this common language where you can read the charts. But the markets have a common language. You need to know that common language so that you can profit from them consistently. That's really what it comes down to. Um, and this is the start. This is the visual representation of how all markets move. A visual representation of how all markets move. They move up and they move down. They move in uptrend. So this on the left is what we would call an uptrend, where it goes up, comes down, and goes back up. But there's a language there. We're gonna get into that. And then on the right side, you have a downtrend where the market goes down, it goes up, and goes back down. And how can you quickly assess if something is, and we'll look on the charts, when it's reaching for the sun, it's in an uptrend. When it's reaching for the bottom right-hand side of that screen, then it's in a downtrend. Super, super easy to spot. And I know it sounds like I'm simplifying this, but by the time we finish this call, you're going to see how simple that piece can be. Everybody tracking so far? Any questions up until now? Drop some ones if there are no questions until now. Okay, awesome, awesome, awesome. All right, so remember that I said that there is a common language, right? And I'm just gonna look at this picture and I'm gonna go back one time. Up, down, up. Now on this, the language is for identifying a trending market is there's gonna be a low point, there's gonna be a high point, there's gonna be a higher low point. And I'm just referencing that this low point is higher than the previous low point, and then there's going to be a higher high. And that higher high just represents that it's higher than the previous high. This higher low is higher than the previous low, and this higher high is higher than the previous high. Drop some ones if that makes sense. We tracking? All right, great, 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 great. The reverse is true. The reverse is true. For markets that are trending down, there's going to be a high point, there's going to be a low point, and then there's going to be a lower high point. And all we're saying here is that this high here is lower than the highest high, and that this lower low is lower than the previous low. Does that make sense so far? So super simple, right? And now you can see, if we go back to this picture, you can see that that's it, that what it looks like in motion. But what we just did was give it some, we gave it some language. We gave it something that we can identify. And as we move forward, we're going to use what we call candlesticks. We're going to use something even more specific to identify these things. All right, so now we're moving on into the introduction of Japanese candlesticks. Japanese candlesticks have been around for a long, 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 long time. Long enough that how these all ended up coming about was Japanese rice farmers from city to city, from town to town, from city to city. They needed a way to track the opening and closing prices of rice, so that they could be able to, how much should I be charging? What's the fair value of what I should be charging for rice from city to city, from town to town and city to city. And so um, Japanese Japanese candlesticks were formed to in a way to be able to read prices in this way. And what you're going to learn is, well, first of all, these candlesticks that you see, these are candlesticks. If you've seen these before on a chart, drop some ones, please. If you've seen these before on a chart and you're like, man, you know what? What is this? And it looks like Chinese, not necessarily Japanese, but it looks like Chinese. Drop a two if you have no idea what this is. Drop a two if you have no idea what this is. Wow, that's good. Good, 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 good. So, so we have Chastity, Kanisha, Kat, Brianna, and part of my goal by the end of this is I want to see if we can turn that into ones. I want to turn that into a one. All right, great, great, great. All right, so this is a Japanese candlestick, and I'm going to show you how to read. What does this even mean? Somebody give me a favorite fruit quickly. Give me a favorite fruit.
Mango.
Mango. Man, that was quick. I'm a mango dude myself. Okay. So let's say that we go to the market. The market opens at the market. We're gonna assign it some numbers. The market opens at 8 o'clock a.m. and it closes at 3 p.m. This is the mango market. And on the left hand side here, can I draw on this? Let me see how bigger I can make this. Can you all see that white line? Okay, great. The mango market opens at where you see where it says price open, right? Price open. So the mango market opens right here, and we're gonna use some basic numbers. $1. So $1. The mango market opens at 8 o'clock at $1. Um, 8, 12. We'll use 8, 10, 12, and 3. So 8 o'clock opens at $1. At 10 o'clock, the mango market drops to 50 cents. Oops. The mango market drops to 50 cents. That means that people are only willing to pay. Buyers and sellers have agreed that, hey, this mango is worth 50 cents at 10 o'clock. And at 12 o'clock, the mango market reaches $2 because the price has gone, the demand for mangoes have gone up. And then by the time 3 o'clock comes, the mango market closes at $1.50. All right. So the price of mangoes open at 1, it dropped down to 50 cents, and then it went as a high of $2, and then it closed at $1.50 at 3 o'clock. Is that making sense so far? Just drop some ones that it's like, oh, okay, all right, mango a little volatile. Went from $1.50 to $2. Damn, mango's pretty high. So this is essentially what happens all day with all of our um all of the things, everything from oil, everything from your regular sugar, milk. um there's a market for all of these things, and these prices are moving up and down. Even your currencies, all these things are moving up and down all day long. But what does it have to do with the candlestick? What it's communicating is each candlestick, a bullish on the left hand side. This is what we call a bullish candlestick because it went up, and it gets its name from the way that the animal attacks. A bull will attack by charging ahead. And so when a market is going, when you've how many of you have heard the term bullish? If you've watched some kind of TV, if you've talked to a financial advisor or somebody like that, you probably heard this term bullish before. But that's where it gets its name from. Is that it's the way the animal attacks. It's charging ahead, and so this is just saying, hey, this market is charging ahead, or this asset is charging ahead. That's where it gets its name from. And so it opens at one price, maybe it goes down a little bit, but then it charges ahead. It charges ahead. And if it closes higher than it opened, so in our case, the mango market opened at $1 and then it closed at $1.50. This this just represents price gains for the mango market for the day because it opened at 8 o'clock, closed at 3. And the price gains were the difference between where it opened and where it closed. So that's 50 cents, right? Is this making it a little easier to understand what's happening here so far? Now, what about the rest of this? So we call this a candlestick, and the candlestick is comprised of two pieces. This is the body. The body is just representing what price gains happen, and this is the shadow or the wick. That stick, we call it a wick. And what does that mean? This just means that the price went here, but it didn't stay there. The price went to this area, but it didn't stay there. And the example that I really like to give is if you're on the beach, let's say that I'm going to draw the ugliest little person. Can y'all see the person? Okay, if that person walks 5 steps that way, and then how many ever 5 steps back? What's left in the sand? What's left in the sand? Footprints. Footprints, right? Footprints are left in the sand, but the body is back in the same place that it went. So think about these candlesticks the same way. Whenever you see a wick like this, it just represents where price went to. Remember, price went up to $2, but it didn't stay there. The price went down to 50 cents, but it didn't stay there. It went right back to where it opened. It opened here, went all the way up here, didn't stay there, and came back and closed at $1.50. Does that make sense to everybody? I want to make sure everybody is tracking before we move on to a bearish candlestick. Ding, ding, ding. I like my stick person. Okay, so bearish candlestick. It's just the opposite. So how does somebody tell me how does a bear attack? How does a bear attack? When it attacks something, hopefully not us, but when it attacks something, how does it attack? Okay. It attacks by clawing down. It attacks by clawing down. All right. So that's what this candle gets its name from. It's a bearish candle, and a bearish candle is going to open at the top and it's going to move down, go all the way. Well, let me do this over. A bearish candle will open at the top. Maybe it goes up a little bit, but then it'll drop down like such. Maybe it goes all the way down, but then it'll close here. So another example would be, let's say the next day, tomorrow, remember that the mango, somebody tell me, what did the mango market close at? What did the mango market close at?
150.
150. All right, so 150. What was the high?
$2.
$2. All right. So the market opened the next day. It opened at 150. It had a high of $2, and then it dropped all the way down to what price?
50 cents.
And then it closed right here at $1. So now the mango market is back to $1. Put that right here. So that's how this is what a bearish candlestick is, and this is what ultimately when you see this is what's happening. That the market for this asset has dropped, has experienced has experienced losses in this way. It just means it went down, and then this is where it closed. Everybody tracking so far? We get into the good stuff. Well, it's all good. All right. Anybody need any more clarification before we move on? All right. All right. So this is just another just basically without the extra on it, just showing hey, it opens at the bottom, closes at the top, it has a high and a low. Opens at the top, a bearish candle opens at the top, closes at the bottom, it has a high and a low. What's the similarity? What's one thing that you notice here that is the same thing? There's two things that you notice here that's the same. Two things you notice here that's the same. The high is the high. The highs are in the same place, and the lows are in the same place. The highs in the same place, and the lows are in the same place. All right. And another aspect of this is one way to think about this. When you go to your favorite restaurant, I want you to think about all of these candles. Each one of these candles is a range. So when you go to your restaurant, they say, "Well, how was the service? Rate us from 0 to 10." Well, this is the same is true here in terms of it just being a range because there's a number assigned to it. And if we assign a number from 0 to 10, It's just a range, right? So just to help you really understand what's happening here, it's just a range, just a range of numbers. But it's we're able to see it in the form of a candlestick. All right. So now we're going to move on to the introduction of support and resistance. Support and resistance, and what that means, and how we use that to as another part of the language, the common language that exists in the markets. Excuse me. All right, so what you have here is a house, and somebody quickly tell me how many floors are in this house, how many ceilings in this house. Floors and ceilings. How many floors? How many ceilings? Nobody. Nobody. Okay, four and one. Okay, all right. That's 4 floors and floor ceilings. Use red. All right, so here we have a floor and we have a ceiling. Above that we have a floor. Above that we have a ceiling. Above that we have a floor. Above that we have a ceiling. Above that we have a floor. Above that we have a ceiling. Withstanding this. All right. So now what happens is in the markets, what happens if we take a ball and we drop it on the floor, what's likely to happen with that ball? It's likely to bounce, right? It's likely to be supported by this floor. It's likely to be supported by this floor. And I'm gonna show you what the significance of this is. If we have that, take that same ball and we throw it up at the ceiling, it's likely to be resisted by that ceiling. Right? Everybody with me? Drop some ones if you're with me. If we have a ball and we drop it on the floor, it's likely to be supported by that floor. And the reverse is true for a ceiling. If we throw it up, it's likely to be resisted. And in the markets, when let's say, for instance, if we happen to if something breaks a resistance, if it goes through a point of resistance, then that is more likely to become the new floor. All right. Well, let me explain it another way. If you let's say you have a broomstick. You have a broomstick and you poke it through that ceiling. Is that a break of resistance? Everybody agree that that's a break of resistance? That's a break of a ceiling? You now have a hole in that ceiling, right? And as it relates to the markets, when price goes above a ceiling, when a ceiling is broken, it's likely to become a floor, and then the market will bounce from that area and then it'll move to the next ceiling. It could resist that ceiling, but if it goes through that ceiling, it's likely to become a support, a new floor, and so forth. And I've color coded this because we're going to be able to identify when there's support, and we're going to be able to identify when there is resistance, and then we're going to put some rules around what you should do when those things exist. All right, as it relates to uptrends and downtrends. Everybody tracking so far? Let me know if you need a little bit more explanation. I'm happy to do that. But we're gonna keep this thing moving. All right. All right. Support and resistance are super, super, super simple to identify because remember, we have already talked about bullish candles and bearish candles. So when you have a bearish candle, it's indicating that price was going down. Actually, I want to do this in the actual color. This is just indicating that the price was going down. And then whenever there's a green candle right after that, it's indicated that the price is going up. that the sellers were driving the price down, that meaning there were more sellers than buyers, and then the buyers started to drive the price up. And this is what forms support. Very, very important. Wherever you see a green candle after a red candle, it is what we classify as support. Red candle, green candle, support. Is that super easy to everybody? Is that easy enough? All right, great, great, great. And then resistance is the opposite. It's just showing that, hey, the market was going up, but then, oops, probably went too far there. It was going up, and then it started to go down like that. Super, super clear, right? So wherever you have a green candle and then a red candle, that's resistance. And then wherever you have or ceiling, we can also call it a ceiling, and wherever you have a red candle, then a green candle is support, and we would call that a floor. Is that simple enough? Any questions about that? All right. Keep tracking. So remember, I mentioned when we first started that we're going to talk about two P's: participation, when to buy, and then protection. But first, we're going to talk about participation. So notice I have this super simple illustration that you have somebody let me know what do we have? Do we have support or resistance here? Do we have support or do we have resistance? Support or resistance? Okay, great, 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 great. We have support. So super simple. Now, everybody remember this illustration where you had a market making a high and then a higher high? Do we all agree that this is the highest point based on what you learn about candles? Do we agree that that's the highest point on that candle? I need some ones or some twos. If we have some twos, I'm going to explain it. We have all ones, we're going to proceed. That's the highest point on that candle, right? And this is the lowest point. So then if remember, if a market is trending up, it's going to make higher highs, higher highs. It's going to continue to do that. So our easiest, most simple way to participate in the market is after we see this support and the next candle is making a higher high. But what we want, remember each candle has an open, high, low, and close. Open, high, low, and close, what we identify. We want to see this, which is going to make more sense when we get on the actual screen, but we want to see a candle move above the previous green candle. We want to see it close above the previous green candle. Everybody with me so far? So this candle here is making a higher high. We agree? All right. Great, 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 great. All right. And then on the right side, this is just another scenario. It's just a little bit different. Can we see this as resistance? Do we see that as resistance right there? Drop some ones, let me know. And then can we also identify this as a high right here? Isn't that a high? That's still a high, right? And this is still a low. We agree? So when we have this candle that breaks above that area that's making a higher high, right? That same thing, then we also can be a buyer. When I say participate, we can be a buyer right there. What we're going to say, we're going to be a buyer here. Be a buyer right here, and we can be a buyer right here. Is that simple enough? It's probably going to be easy to just keep it just like that. Is that simple enough for everybody? We want to buy when the market is making a higher high. Out after support or after it breaks resistance. All right. Super, super, super simple. And I'm going to show you how simple that can be. All right. And now I'm going to move on to protection. This is my favorite aspect of this. Everybody, again, I've been training people 11 years, and it never fails that there's a reason that the majority of people want to talk about participating first. And it's because everybody wants to make some money. But nobody wants to think, how can they protect themselves? Everybody wants to gain, but nobody wants to lose and think about losing. And so this piece, if you will think about this piece first, it'll make your investing years much easier. You'll prosper because you always want to be protecting. You always want to protect the house. You always want to protect the war chest. And this is what you're going to learn is a very simple way, proven way to not lose a fortune. Make a fortune, but not lose a fortune. All right. And what that is we call this a stop loss. All right. And all this is this red line. I'm going to show you what that means. Um, but notice how it's under this area after the market is making after we enter. If the market drops start all of a sudden turns like this, we can limit our losses because low high can always become higher, right? This can always continue up and this can always continue down. So we don't want to get into hope mode. We don't want to hope it's going to turn around. We want to say, you know what? I lost $1 out of 100 and I'll find another opportunity. But if it continues up, maybe I make five, maybe I make six, maybe I make seven, maybe I make eight. But I always want to limit it to losing a small amount. Does that make sense to everybody so far? Like we want to have it already decided, hey, in a very methodical way. If this does not work, I know how much I can lose. And that is how you prosper long term. Because there is nobody in this business that I lose all the time. I just don't care about them because I make so much more when I win. So you want to lose methodically. And we put this, usually this is going to be under some kind of support, and this is what we call a stop loss. And all stop loss means it's something that the computer will automatically do for you as well. But it just means stop losing. Stop losing at this point. I don't want to lose more than $1. And a quick thing I want to do in math, and then we'll continue. If I have $100, no, I'm going to say you have $100. You have 100% of your business. 100%. This is how much of your business you own. Oops, I put that backwards, didn't I? You own 100% of your business. Would you risk 50% of your business on one deal? I want everybody's answer. Would you risk 50% of your business on one business deal? The deal doesn't go well, you lose 50% of your business. You wouldn't. This is the same thing. So what we're going to be doing is saying, hey, I own 100% of my business and I'm going to risk 1% of my business. The industry standard is 1%, 2%, right? And I'm going to just do a quick math lesson on this. Industry standard is 1%, 2%. So what that means is I can lose 99, I can lose 50 times and I'll still be in business if I'm risking 1%, right? But if I risk 50%, then I only have to lose twice and then I'm out of business. But in that process of losing those 1%, there are going to be some times where I'm going to put minus. There are going to be some times where I gain 5%, right? I'm just going to put 5 because that's just drawing a percent out. It's just too much right now. I'm going to lose 1. I may make 3. I may lose 1 and then I may make 4. I may lose 1 and I may lose another 1 and then I may make 5. This is investing long term. You're going to lose some, but you just want to lose small. And this is why this is so important. Is that registering to everybody? Can you see the importance of why we call this is called risk management, but this is risk management one-on-one. Lose small, gain big. And so the same is true over here is that this is support. And hey, if the market all of a sudden turns around just like this, hey, I only want to lose a small amount because this is going to happen because we can't control the market. It's not about controlling the market, it's about controlling ourselves and then also controlling what we can control. All right. Everybody tracking? Everybody tracking because we're about to move on to the charts and we're going to look at some real examples and then I'll answer some questions and we'll go from there. All right. Cool, cool, cool. Before we move on, has this been eye-opening thus far? What is the most I want to know what is something that has stood out to you thus far? Candlesticks. Simple terms. I love that. I love that. All right, let me know you all can see my screen. Okay, so I'm going to do a little bit of walk around so that you have some clarity about what you're looking at. This platform that I'm using right now, it's a free platform you can use. It's called TradingView, and they have free version. Now they do have ads on the free version. By the way, they're not paying me to do this to promote their platform. This is a platform that I use professionally. It's super, super user friendly. You can see the candles over here, and I'm going to just explain a little bit about kind of what we're going to be looking at. And this is all I use. I don't use any outside information. I'm just looking at what's on this screen to make decisions. And so uh, up here, you see the weekly chart. Let me explain this. This is 1 hour, 4 hour, daily, weekly. What this means is that each one of these candlesticks you see is representing 1 week in time. If I click the daily, it's representing 1 day of price action. And we read everything from left to right. And so everything on the right is your most recent data. So this is all the data from today. The date is down here at the bottom, Thursday, October 9th, 2025. And then you can see it go all the way back to April and so forth. And you can go all the way back, go all the way back. You can do all of that. Quickly, is this market trending up or down? Ah, gotcha. Quickly, is this market trending up or trending down? See how quickly you were able to spot that? Look how quickly you were able to spot that. Did you need did you need to know what was happening in the world? No, if it's moving up, it's moving up. If it's reaching for the sun, you can make some funds. I like to say that. All right. So now what we're going to do is look at my recommendation is for your long-term opportunities. Again, I said that I would do this based on like medium term, long term, is look at your weekly charts and your daily charts to find these opportunities. You have your professions, you have other things you're doing, you have your families and all of that. Look at this and study it from a weekly standpoint so that you can find long-term opportunities in this way. And that way you're not spending a lot of time. Um, so I'm just going to start, I'm going to pick a place and just start to find some opportunities. So I'm going to start right here. Do we see you see a green candle and a red candle, right? What's important? This is what's important. You all remember that this the open and the close. So notice how this candle did not close above this area. So you have the green and the red. Notice how that candle didn't close above it, but this one did. Can we and drop some ones if that makes sense? If it doesn't, I will explain it. I'm happy to explain it. But that candle, that one, the body went there. This is a great example, actually. It went there, but it didn't stay there. And it closed here. But this one closed above. So imagine this is NVIDIA, by the way. So if you're following the rules, this is the candle that you would participate on. So when it closes here, I'm going to put a green line. Uh, yeah, I'm going to put a green line. Guess I could just clone this, couldn't I? Clone. Okay. Change this to green. And we need a red. All right. So our participation is going to be there. When that candle closes, you know the best part about this is that we know when it closes. It closes at the end of the week. It's a weekly candle, right? So we can go do this on Friday. You can look at this on Friday afternoon, right before, when the market is closing, and you can say, okay, that meets the rule. Does that drop some ones if that meets the rule? Did it close above? Did it break above? Did it close above? All right. And then our stop loss is going to be under the support. Red candle, green candles. They don't have to be, sometimes they're going to be a little bit far apart, and that's okay. But you're going to put it underneath an area like that. Everybody tracking so far? Green candle, red candle. This candle didn't close above, but this one did. So that's our confirmation. That is our participation. That's our first peak. I want to make sure everybody with me before I move on. The green line is showing participation. The blue line is just indicating where, kind of where the resistance was. And the red line is indicating the stop loss. No, I'm putting on under the red because that's kind of the lowest point in this case, right? Because that red candle is a part of the support, right? Still, that red candle is part of the support. It's part of what's happening in this whole thing. All right. So what happened after that? The market went from 124 to now it's at 166. So that's one opportunity that we were able to find, right? Everybody with me so far? I want to make sure we're tracking. And the reason I want to make sure we tracking, one, is to make sure everybody's on the same page, but also because we're going to speed up now and we're going to find opportunities in some of those other um, in some of those things that we talked about to begin with, like the different types of things that can be traded and invested in. All right, so here's another one. Let's say that, can we see that this is resistance right here? You have a green candle and a red candle, right? Right? And then this is the green candle that closed above. You could buy there and you put your protection here. And you see that that market just continued to go up. All right. And I don't want to just, everybody see that? I want to make sure we're tracking. Resistance. We want to identify the green, the red, and then a candle that closes above that because it's communicating. The market is communicating what it wants to do. It wants to continue to go up from that point. And then you have a stop loss. This means that if the market comes back to this area, we're only going to lose a certain amount. And let's assume that we are risking $1 for each one of these opportunities. All right, let's just assume that we're risking $1. Um, the next one, you have a resistance. Put this up here. You have a resistance right here, right? And did that candle, this green candle right here, did it close above? It did, right? So we're going to say that this is where we're going to participate, and here is where we're going to protect ourselves. Now, notice this just went up just a little bit, and then it came back down and hit that stop loss, right? I want to make sure that we are tracking that. Can everybody see that? This is a case. We're going to say we lost one here. So far we have two that worked, one that didn't. Two that worked, one that didn't. And this is all very recent. This is all 2025 for NVIDIA. Let's move on to the next one. Oops, I did not mean to do that. Move on to the next one. Here is the resistance. Did that green candle close above it? Did that close above that resistance right there? It did, right? So here's your that, and here's your entry. And now we have another winner that's working. Is that simple enough so far? Everybody tracking? And again, I think the most important aspect of, I mean, all of it's important, but this is something you can do on Friday. This is something that you can do on Friday. You can do your research early in the week, and then this is something, a decision you can make on Friday. So let's move this here and give me some companies in the chat. Give me a company to take a look at. I'm gonna look at lumber. I haven't looked at lumber. Let's look at lumber. What's lumber doing? Is lumber trending up or trending down? What's it doing? Baxter. All right, I'll take a look at Baxter. All right. So this is lumber. This is the wood. This is what when builders, your home builders, they're buying and selling lumber on these exchanges because they are thinking about their supply and demand. Like, oh, are we gonna have to build more houses? Are we gonna have to build more houses? We're gonna need more houses 6 months from now. And we're expecting lumber prices to continue to increase. So we better buy it on the exchange right now because we think it's low right now, and we think the prices are gonna be higher for whatever reason. You have home builders buying lumber on the exchanges. What happened to my? Oh, okay. Let's just do that. Really? Let's do three of these. All right. Can we see here, red, green? Can we see that this scenario right here? Can you see where the green candle closed above? Oops. Here. And that would be valid. And now we would have a positive position working in lumber just by looking at it saying, oh, it's in an uptrend, it meets the rules, and it's reaching up. And I'm going to put a buy position on two things: participation, protect was, we want to identify as in a trend, participation, protection, and we're waiting for something very, very specific to happen. I want to make sure everybody tracking so far. See, it is, we have we're doing good on time. Any questions? Any questions thus far? Is this helpful to you? Is this empowering to you? Is it simple enough? I'll take a look at Baxter while y'all answer that. All right, is Baxter trending up or trending down? Is Baxter trending up or trending down? Exactly. So we don't need to do anything with this right now. We can just wait. We can just wait. We can just wait. Let me say this. It's like a song, right? La 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 la. It's green and red. La 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 la. That's what it looks like. But it is falling. But can you also see the pattern inside of that? That up, down, up, down, up, down, up. It's there over and over and over. And now you will never be able to see the markets again the same way. You'll be able to see it this way, the way that it actually moves. And then you're going to have a very clear process to participate in them no matter what without overthinking it. Participate and protect yourself. The thing that I was going to say is that with stock market, with anything in the stock market, you want to, excuse me, the stock market is rigged to stay up. Okay. The stock market is rigged to stay up. Over the past 20, I want to say 22 years, out of all the crisis, um, it has still performed 9%. It has still gone up 9% out of everything that's happened in the last 22 years. It's still gone up 9% on average. So it's harder to, stock can go to zero. So that means that if you let me use the words, if you bet that it's going to fall and the price is at 100 and it goes to zero, you don't want to be in that anyway. And then the max that you can make is 99%, right? But on the upside, a stock can go from 24 to 40 to 48 to 65 to 90 to 100. So the upside, there's more upside to being in the stock market than downside in terms of you should be buying more than trying to, sell, if that makes sense. Um, let's look at let's look at Bitcoin. We'll look at Bitcoin. Then we're going to look at a regular currency, and then we're going to look at some other things. All right. So can we see? This is Bitcoin. Is it an uptrend or downtrend? Uptrend or downtrend? A downtrend. See how quick you're able to spot that? This is awesome. I love it. All right. So here is, you can see that that is your resistance. The candle close above it. So couldn't we be I'm not going to change the colors now. I think y'all got it. Couldn't we be a buyer? We be a participant here, and we can protect ourselves here and see if it wants to continue up higher. And again, we're risking $1. We're saying, hey, I see what happens. And as you get better and better and better, maybe you risk a little bit more, but you're only going up in how much you risk as long as your portfolio is going up. You're not risking because you feel good about it. You're risking more in a very systematic way because you have a proven process to do so. All right. Is that pretty clear for Bitcoin? And we could go back in time and we can identify areas where we would participate. Here's one, right? See that? That's from 2023. So that gives you kind of that long-term perspective. Here we see resistance in that area. We had a break here. There's your buy. Here, same thing. In this case, we would have lost because it would have done okay for a period of time, but then it came back down. But then we will go over here and we will find another one right here. And then we will go over here and we will find another one right here. Everybody tracking so far? Here's your resistance here. And what I recommend, I'm going to go through a few more of these, but what I recommend, I'm going to send this video to you all, but you just go, I would even draw this out on a sheet of paper for myself, right? And then you just go pull up, um, open your free account with TradingView and just go practice on the weekly chart. Just go practice finding the break. Go practice finding resistance, and then go practice finding where you would participate, and just do that over and over and over and over, and you will see it like you've never seen it before. All right, so let's look at a currency. Let's say the African rand. I don't know what that rand is doing, but let's see. African rand. Can I pull it up? African rand. There it is. Let's see what that's doing. All right. Is it trending up or trending down? We don't really want to do anything with that, right? You can just see it's just kind of here. What about the Mexican dollar? Mexican peso. I'm Mexican the peso. So US dollar, Mexican peso. It was trending up and now it's just kind of pulling back some. All right. But can you all see? Are you seeing it in a different light now? Are you seeing it in a different light? So we did Bitcoin, we did a stock, we did lumber, we're doing currencies now. I'm gonna do a couple more stocks. I want to do a couple more stocks. I'm gonna open it up for questions and then we'll wrap up. How about that? That work for y'all? Give me another stock. Mhm. Damn. Okay, no. All right. So looking at Dell's stock, is it trending up or trending down? Trending up or trending down? So if we take the same information, the same process, let's look at just the last 4 weeks. 1, 2, 3, 4, 5, 6 weeks. Six. Green candle, red candle. So what we're looking to do is take the fear out of these reds and greens and what does all of this mean, and just putting some process to it. Well, you got a red candle, green candle, red candle, that's resistance. When price closes above it, it's communicating what it wants to do. And that's your buy. So that's what, 1, 2, 3 weeks of gains. All right. And then you have another green, red, and then price close above it. That's your buy. And then it's continuing to move up. And this is all very, very recent. So there's always, 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 always an opportunity somewhere. And now you have something very process oriented to make decisions on a weekly basis. And you don't have to um, you don't have to you don't have to spend a lot of time. um, you can there are ways to create watch lists, and I'll have probably send another video out for how to create watch lists and stuff like that. But you have the process for being able to know what to do and when to do it and why you're doing it. Let's look at what's another one. Apple, Samsung. Huh? Samsung. I don't know if I don't think that they are public. I'm not sure that Samsung is public. Not in the US. Let's look at a competitor. Do I have a competitor to Toshiba? I don't know if Toshiba, no. Let's do Tesla. All right. So the last here, there's nothing. There's nothing that we want to do. But when was the last time we could do something right here? You have a green, you have a red, you enter here. Your stop loss, your protection goes under here. Here. Now, what would you do next? If you say, I want to buy a Tesla, well, then you already have your resistance. You just need a week. Yeah, check at the end of the week and see if a candle closes above that, or the next week, or the next week, or the next week. And if nothing happens, you do nothing. But wait. All right. So I promise this will be an hour and 30 minutes or so. So um I will stop there and answer any questions that you all have. What was your biggest takeaway? What was your biggest takeaway from tonight? Did this take some fear out of what the markets are and how they work? Did it give you a better, greater understanding of how they work? And did it take some fear out of it? And did it give you a process that you can implement? Noticing trends and when to participate. Awesome, awesome, awesome. Understand the difference between gains and losses and when to jump in. All right. Good, 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 good. Stock market is rigged to win. Yep. Would you explain the time to wait? The time to wait. Renee, are you asking when to participate? The time to wait?
More so where you just explained with Tesla, where
Uh-huh.
that uh start and stop, you like if it doesn't continue to trend, like you can tell when it's a good time to just pause and wait until it does move. Does that make sense?
Yes. Absolutely. So right now we have where I put the blue line at price. The price is always up here on the right too, 44, 44, 44, 61. Notice how you have a green candle and a red candle.
Yes.
But we don't have a green candle we don't have anything that says it's broken resistance. So right now we have resistance. So if we were taking uh, I'm just gonna take a green, I don't know, green ball. We were taking a green ball and just throwing it up to this ceiling. It is coming back down right now. So what we need is that green ball to break through here and then close above that area. Then the probability is that it's going to stay above that area and use this as a floor. turn that ceiling into a floor and continue up.
Makes sense. Okay, now I see.
Just like this right here. It's such a great question. Thank you for that, for having me clarify it. But that right here, break right here, and see how it just retested that and then continued up, or bounce back down to the floor and continued up. That's what we want to see.
Okay, thank you for clarifying it.
Yep. Anybody else? If you say the best day is Friday, Monday to Thursday only for analysis, yeah, you can do it that way. You can use Monday through Thursday to just kind of scan, to just kind of see what you want to do in the future. And then on Fridays, just come and take a look and see if any of those meet the criteria. And the markets close basically at 3 p.m. Central. So the closer you get to 3 p.m. Central, you're seeing how the market is going to close. You're seeing how that candle is going to close, because that's the end of the week. So you'll know as 2:55, you'll know exactly what's happening. Excuse me. All right. I'm super grateful that y'all showed up to listen. And again, like I said, this is not a pitch. It was just something like, hey, you know what, I'm gonna do this, and whoever shows up shows up. But I'm gonna do what I feel is right. And I hope that this has been helpful to you. Share it with a friend. You know what I mean? I'll send the replay out, but share it with a friend. If if you recorded some of it, tag me on social media so I can reshare it. That's the only thing I'm asking. Other than that, thank you. And I hope that is helpful to you, your family, and your friends for a lifetime. All right. So y'all have a good night. And I'll make sure to send this out. All right.
Thank you.
You're welcome. Take care.